All right, ladies and gentlemen, welcome to my first ever video here on this channel. Today we're going to be going over something which I believe is very important, and I believe is going to be something that you can take with you for the rest of your life. Today we are going to be going over choosing the right financial institution. This is basically saying where are you going to keep your money, period. So it can be a little bit stressful. There's a lot of options. You don't know which is best for you. You don't know how to decide. That's what I'm here to help with. So let's get right into it. So what I believe is very important first is understanding the different types. I'll go over more detail into this later, but you have traditional banks. This is what you see all around when you drive, your Wells Fargos, Chases, Truists, all of them. Then you have credit unions. Here they're a little bit more common in the coming days. And then you have online banks. These are becoming more popular as well. Here's a few examples. Obviously, SoFi is online, so they don't have physical branches. So here's a picture of the stadium. So first, I believe it's important to go over some terms. Bear with me. I swear it's not going to be that bad, just so you can understand what I'm saying as we get later on. So we have APY. This stands for annual percent yield. Typically, you'll find this with savings accounts. It's just saying how much money they're going to be giving you for having your money in the savings account per year. Again, we'll go over more of that later. FDIC/NCUA. This is just insurance. Whenever you get an account, make sure it has this. Basically saying if we go through another Great Depression, you're not going to lose everything you have. Overdraft. This is basically saying if you go over balance and go negative, what happens then? So whether that's fees or protection, overdraft protection, that's all dependent on the bank. Minimum balance. This may sound intuitive, but actually it's not what I thought it was the first time I heard this. It is basically saying that certain banks require you to have a minimum balance in your account, not zero. For example, some accounts may say you need at least $1,000 before you get hit with any fees. So if you have less than that $1,000, there will be fees on your account, which no one wants. Out of network, specifically with ATMs, certain banks have different networks in branch or in their system. So when you go to an ATM, you'll typically see some bank on the ATM, and certain ones are out of network. So just because it says PNC on the ATM doesn't mean only PNC bank owners can use it. Anyone can. But if it's out of their network, then you will be hit with some fees. And then compounding. So typically, as you can even see by this little graph down here, this would just be, it's not linear, but it's normal growth. Compounding would be a graph that looks like that. I know there's a way for me to get a laser. Here we go. It looks like this. The whoop. Because this money makes this more, and then that makes more, and then that makes more and more and more and more, and then you're making a lot more. Let me turn this off. And let's go to the next slide. So, why APY matters. This is what we were discussing before. If you've already heard this term before, then you would already know the answer. But if you have never heard it before, hey, I'm here to help. So, APY. You'll see this on, apologies. So APY, you'll see this on every savings account you have. Typically at traditional branches, it's 0.01% for their entry-level accounts. This is saying that every year, so annual percent yield, so annual every year yield is what you're actually getting back. So let's just say you have $5,000 in your savings account. And if it's at 0.01% APY, annual percent yield, you will be getting 50 cents a year. Yeah. So, and then that's split up into 12 months, which is however many, 4 cents a month, pretty much. But more commonly with credit unions and online branches, you get higher APYs, which could be anywhere from around 4%. Typically, it's a bit lower. This is on the higher end, but Anywhere around that 3 to 4% is typically good at this time of year. December 2025, just so you know. So if you have that same $5,000, but it's at 4% compared to that 0.01, you're now making $200 a year. Then again, you divide that by 12 and you're getting closer to $20 a month compared to 4 cents. So, and again, this kind of goes back to that compounding we were talking about. Because if you have the $5,000 and you get the 4% in January, in February, you'll now have $5,020, and then you'll get 4% on the $5,020. And then it just keeps going up and up and up. So if your money's just going to be sitting there in an emergency fund, make sure it's a high yield savings account. Make more money on your money. So let's get a little bit more specific. So we have the traditional branches. These are the ones that have physical locations. Here, I would really only recommend it if you tend to have a lot of cash on hand and need to deposit it or do a lot of withdrawals. If you don't, there's not really much of a point unless you like going into a branch and asking questions or different things like that. But with the other ones, you can also call. But again, that's up to you. Cons, they often have the lower savings rate. We were just talking about that earlier. They tend to have more fees. They tend to have fees if you go overdraft. They tend to ensure that you have that minimum balance that we were talking about. And then a lot of other ones, which I can get more into detail about if anyone's interested. Then I have a little note here that they care more about money. What do I mean by that? Typically, traditional branches and online branches are owned by the people. Or they're owned by investors. They're owned by investors, meaning they want to make as much money for them as possible. So they push out credit cards, they push out loans, they do all of these things to maximize their profit rather than helping you out. It's not necessarily a bad thing, it's just something to keep in mind. Credit unions. So these are a little bit different. They're member focused. These are the ones that are owned by the people. And when they're owned by the people, that means they're not going to be pushing out fees. They're not going to be pushing out loans or credit cards. They do offer them, but their goal is to help the people. So if you have a credit card loan, they're going to go over different ways to help you out with the interest rate and different ways to get that down. However, there are some cons. So it is a bit older. Credit unions, since they don't make as much as the traditional branches, they won't have as much technology. And with them being smaller, making less money, they're smaller, which means you also don't have as much access. You don't have as much availability. And some of them require memberships. And then lastly, online banks. So here is going to be what's most applicable for most people, I would assume. There's higher savings rates. This is because they don't have to pay for physical branches, so they can pay back their customers more. And also, they have lower fees simply because more people have more money in there, and they have strong digital tools. As an online bank, that's kind of like all you have, so you got to make sure it works. However, some cons. There are no cash deposits, obviously. Everything is remote, and if you ever need in-person help, it won't be great. Again, there are some workarounds. There are customer service lines you can contact, but is that something you want to be dealing with? If it is, this is for you. If not, then maybe one of the other options will be a better fit. So, when it comes to picking a checking account or an account in general, so let's go full screen. Hi. So, with accounts at a bank, you tend to have two options, as you probably know: your checking account and your savings account. Your checking account is where all your transactions are going to be. Here it doesn't necessarily matter. You just want to make sure you're not being hit with any fees. However, a savings account, this is where it's more important. Savings account, there's a few different things that I like looking for in a savings account. First is the APY, which I believe is most important. Make sure that that's anywhere above 2.5%. But that's just important for you to build your savings passively. You don't have to worry about it, and it just kind of grows for you. You don't have to do anything. You also want to make sure there's no fees or minimum balances. And another important thing to think about is checkbooks, which I'll go over here in just a minute. All right, checking accounts. So you want to make sure you have no monthly fees. Or if they typically, typically if a bank has a fee, there's different ways to avoid it. So you just want to make sure that either you're not going to have any, or if they do have some, you just know how to avoid it. Typically is that minimum balance, direct deposits, different things like that. Hey, minimum balance. So you want to check the minimum balance. If you have $500 and if you get hit with a $10 fee, if you have less than $1,000, that might not be the bank for you. So you also want a good app with easy payments. This, again, just mostly depends on the person. If it's an online bank, you do want to make sure they have a good app. Make sure things are easy to navigate, easy for you to find. If things are too confusing, it'll just add more hassle. You can easily look at app reviews and you can come up with your opinion then. ATM access, if you need to do deposits, withdrawals ever, another important thing to think about. But again, checking accounts, it's typically, debit cards and checkbooks. I forgot to add that to the spreadsheet. So if you use credit cards, it won't necessarily matter. But if you tend to prefer to use debit cards, you want to make sure that they actually have a debit card option. There are a few online banks that don't, so just make sure that they do. And then checkbooks. If you ever write checks, make sure that they have checkbooks, either free or cheap. However, typically you don't need checks anymore because there's so many different ways to transfer money: Cash App, PayPal, Zelle, which I'll go over in here in just a second. And then you have savings accounts. So here, as I've mentioned 1,000 times, you want to make sure it has that competitive APY. So you just want to make sure that it's greater than the industry average. It'll tend to say the average is like 1%. That's just because the physical branches bring it down. So you want to compare the average of the high yield savings accounts, which is just a fancy way of saying they have higher APY. Same thing. FDIC, NCUA insurance. So FDIC is for banks, NCUA is for credit unions. So just make sure that's there. If you pick a popular institution, they'll definitely have it. But if you pick something a little bit more niche, you just want to make sure that they do. No withdrawal penalties. If you ever do ATMs or withdrawals or anything, you want to make sure that you don't get anything for taking it out of your savings account. Again, it's not very common, just something you want to keep in mind. Easy transfers. You want a bank that you can easily transfer from your checking to your savings and savings to checking. And then different fees to watch out for. So monthly maintenance fee. Some different institutions have this. Again, it's not very common anymore because it's kind of being faded out. But again, something to keep in mind. Overdraft fees, if you ever go negative on your account. Different places have different overdraft protection processes and different things like that. Something to keep in mind, but if you tend to have a good amount in each of your accounts, nothing to worry about. ATMs, like I mentioned before. Foreign transactions, if you ever travel or deal with anything internationally. And then wires. This, again, isn't that big of a deal for most people because if you understand different wire fee transactions, then you probably don't need this video. But if you tend to send a lot of money to people that would be greater than Zelle, checks, different things like that, then this is also important. Payment required. Because the last thing you want is your financial institution hitting you with fees and fees and fees because then you're not making your own money. Lastly, some digital features to consider. Mobile deposit. So if you get checks rather than direct deposit, make sure that you can just take a picture of the check and you can deposit it like that. Not the most important, but if you do get checks like for Christmas or whatever, it could be beneficial. Bill pay, if that's something you enjoy, make sure that they have it. I'm not a fan because I like looking over everything, but if you don't want to see it, don't want to be bothered with it, definitely something good to have. Zelle, it's good to send people money. Alerts and security, also important. All right. And then lastly, the most important one, if you skipped here, this is really all you need. So here's how I would decide which financial institution I would pick. So first, if you have cash, that's the only way I would choose a traditional bank. Again, you have your Wells Fargo's, your Truist, your Chase, all of them. So if you have cash ever from your job or whatever, I would have a traditional bank. If you care about loans or community, or I don't want to say morals, but if you care about community is a good term for it, I would choose a credit union. They kind of do what's best for the people rather than the company. So if you like the vibes of that, then I would go with a credit union. And then savings. I would choose an online bank. So if you need to build up your savings, I would recommend doing an online bank. They, again, tend to have the higher APYs because they don't need to pay for a physical branch. But again, they also have their negatives like I discussed earlier. So I would just keep all of these in mind and pick which is best for you. Last but not least, I have a little bonus if you made it all the way to the end. You can have two banks. So one method I like using is Zelle. You attach your email to a traditional bank and you attach your phone number via Zelle to your online bank. So this way you can transfer money from your online bank to your traditional and get that in cash. Zelle is available instantly, so you don't have to worry about that. And then same thing, if you ever get cash for your birthday, Christmas, whatever, you can deposit it into your traditional bank and then just transfer it over to another account. But yeah, that's everything. Thank you so much for watching. I hope you enjoyed. And thank you for watch. It does say watching, I swear. I hope you enjoyed. If you did, leave a like and a comment. Let me know if there's anything you'd like to see in the future. And I appreciate you all very much. And have a great rest of your day.